Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Friday, June 10th, 6:12 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Pretty flat in front of the big CPI print we've got this morning at 8:30. Oil and nat gas are marginally higher, but not a lot of fireworks this morning. Got a lot to go over today after yesterday's big move, so let's dive right into it. Revisiting our NYSE oscillator, NYMO. We had the big spike on the rally off of the lows, and now yesterday we took a big leg down. So time will tell, but I may have to carve in my desk a little bit deeper the adage, don't fight NYMO. Obviously, with yesterday's move, pretty decisive. Once NYMO gets overbought, chances are pretty good that it's going the other way. Maybe it turns out it wasn't different this time. All is not lost, but we've got some serious levels to consider now this morning after yesterday's move. So let's plow on and look at the NASDAQ oscillator. Very much the same thing, overbought, big leg down. I think it was a 90% down day yesterday, so pretty significant. As we move towards SPY, I want to point out some elements of the charts that I want you to, in the video I may not cover on every single chart, but I want you to pay attention to on whatever charts that you may be trading, aside from the indexes and FATMAAN names that we go over on a daily basis. Starting at the top on RSI, you can see here on the SPY daily, while we had broken above the 50 level, moving into the bullish regime, yesterday we dipped back down below. Also on the PPO momentum indicator, I had drawn the analogy back here from this bounce to this bounce, showing how momentum had gone positive, etc. And, it looked a lot like this one. And it still does. A rise in momentum, then a gradual fall off. But the thing that I want you to pay attention to is this potential bear cross and momentum right below the zero line. And if you've been with me for a while, that is a very bearish setup if you get the bear cross in PPO just below the zero line. That usually is a surefire indication that price is going lower. And so in your studies, look at the posture of the PPO in relation to the zero line. You can see back here, when we got the rise, we powered through the zero line and didn't put in a bear cross until much higher. Whereas in this instance, we had the bull cross from a lower level. We got the bounce, but if this continues to fade, you're going to get a bear cross below the zero line, with the zero line acting as resistance on the way up. So we got to watch that real close. Now today, with the CPI print ahead of the tape and ahead of the cash open, we'll get that print at 8:30. There's the potential for some fireworks. And remember, 8:30 it, I don't even know what the what the what the expectation is for the print. Really doesn't matter. What matters is the reaction to the print. It could come in as in line, and they rip it higher or they rip it lower, or vice versa. So it's a nice factoid to have. We missed, or we came in better or worse, but we trade price, so that's really the most important thing. And so now, just looking at it, we had a bounce. We consolidated for a long time. I don't know, what is that, 8 or 10 days? And then yesterday, we dropped down below this trading range. On the face of it, that's bearish. We lost, we had been focused on the 50, saying all along we needed to take that out to go higher. We never did. And now we dropped down below support, not only technical support at 410, but also the 8 and 20 day moving averages that were acting as support below. So now we're below all of that. We lost this 405 level. And so now I think 400 becomes mission critical. Could we go down here, get a bounce? Yes, we can. Or we can just power right on through it. So to me, 400 is a really, really big level for this morning. Now, let's go on to the 60-minute chart, and we can get some resolution on this. So where do we open? Yeah, we opened at 409, and there was a brief rally in the morning that got us up above 410, but then we lost it. And whereas in all these other prior occurrences, the top of the gap had held, but yesterday it didn't. So we had a gap fill, and then we had a very weak close yesterday, closing on the dead lows, no bounce at all. So today, 400 is the line. Let's put it that way. Now, so when you're trading today, I would be focused on a couple things. Number one, do we go down and touch 400 and hold? In which case you could have an objective long, right, against support. Or do we go higher and recapture 405? That would be bullish. Why? Whenever you recapture a key level from below, that's bullish. That's a buy point. So right here in the middle, I don't think you have anything, unless you held your position overnight, of course. Then you're either one way or the other. But assuming you don't have anything right now and you're actively trading, for me, a recapture of 405 would be a buy, and then you're looking for a move back up to the top of the gap. Let's just call it 408, 407.70, however fine you want to get it. So that would be a bullish reaction off of CPI. And then let's just assume we get a bullish response. We make a move off of the lows, come up, find support, and bounce. We would have a situation where, we had a pullback, and then we had a higher low, right? Had a low here, and then a low here, and get the bounce. If we don't, then I think you're looking at 397 and then 394 on the downside. And then I think you'd have to assume we would be going lower. So this morning, if you break 400, that's your objective short with a stop just above, and see how far it goes. And then, if it comes, a little whipsaw, comes down and comes back, you're stopped out fairly quickly. Let's move on to the Qs. A lot of the same elements. Back down in the bearish regime in RSI. Here, the positioning of the PPO is not as high as it was in SPY. And that corresponds to how price behaved as well. You remember in SPY, the corresponding area was up here in towards the 50. We never made it that far in QQQ. And so yesterday, we lost this 305 that had been good support over the last however many days in this consolidation. And yesterday we lost the 8 and the 20. We came down and filled this gap down to what is it? Let's go to the 60-minute chart to get fine-tuned on this. Yeah, we came down to 299 to fill that gap. What I've done is put in a trend line off of these lows. So now we've got dual support at 299. We have the uptrend line that comes in, and we've got the bottom of gap support. I think mission critical today is 298. You can see support, support, support. We're at a high volume over price bar here, which lines up with 299. So this morning, depending on how it reacts, I think you can, pick a spot. I mean, we're trying to fine tune it here, so I don't think $1 makes an incredible amount of difference. But if 299 holds, and I think we'll know, pre-market what the direction is going to be, at least initially. A recapture of 302.40 would be an objective buy level, and then a big level to get back on track for a higher resolution is going to be this 306 level here, which was the bottom of this consolidation zone. So you've got two objectives on the upside, 302.42 and then 306. On the downside, I would not, if it got to, 298.50, I would not personally get too excited to lay on all, go gonzo short. Why? Because you've got this level at 298 right below that, from a technical standpoint, should be pretty important. So if we go down and 298 holds, I think that could be another objective buy for you there. Or if you want to wait to see if it breaks, if it does break, or if you tried a long and got stopped out, then you've got to immediately flip over to the bearish case, and then you can get short against 298, and then you've got a layer at 294, and then you've got a layer at 289-ish on the downside as objectives if this resolves bearishly today. IWM has been the strongest of the three. Why? Because we had actually recaptured the 50 at one point, but now, like the others, we've dropped down below the 8 and the 20. We've got a layer of support at 182.50, and then we've got a layer at 180. I've penciled in what could be construed as a bear flag from this move. A, B, C. For me, I don't think I would be interested, in a gonzo short unless we broke this little flag structure down around 180. You break 180, then you're below the flag and you've lost, a couple of these levels. Then I think you've got a decent short down to, 172.50, or even to test these lows at 170. On the upside, let's go to the 60-minute chart. You can see we've got a layer of support here at 182.50 down to 181, where we've got this volume over price bar. We've got a resistance level here at 182.50. That was support here. But then here we've got where we undercut it down to 181, and that lines up with a level back here as well where 181 was support. So from this standpoint, if we break lower out of the gate, I would wait till this zone was violated before trying to get short on IWM. If you shorted it up here on the break of this trend line, or even on the break of 187, then you can stay short and see how this resolves down here. And if it looks like it's stabilizing and holding, then you can just close out your short with a nice $5 win, or wherever you got in. That would be fine. So now if we end up breaking higher out of the gate, I think this 184.50 would be a buy point on the way up, and then your target would be 187, and so those are your levels on IWM. I wanted to show you something on the daily chart. Notice that on the PPO, we had actually got up to the zero line, whereas in SPY and QQQ, remember, this whole pattern was below the zero line. And you can see that on RSI we're still right at the 50. So relatively speaking, the IWM has been a little bit stronger than QQQ and SPY. Moving on to Facebook, which is now going as Meta. It's probably going to take me a while to convert over. I'm just going to keep calling it Facebook for now, but the symbol has changed. And in that symbol change, I lost all my annotations on the 60-minute chart. So I'm just going to show you the daily chart, where for some reason luckily I retained those levels. So we came up, tagged the 50, and yesterday really let go. Down below all the moving averages, we're back into the old gap that I have here in purple, and we lost this 187.50 type line right here, and now we're squarely in the middle of the gap, which had been filled. Right here we came up and filled that, but now at this midpoint, I don't think you really have, you can get some resolution on the 60-minute chart, but in general, what I would say is, as long as it's below this 187.50, the door is open to come down and retag the bottom of this gap at 175. And then, of course, there would be a big decision. Is it, do we go down, find support here, and bounce up, or do we break the prior lows and head lower? And you know how that goes. You break a prior low, that's as automatic a sell signal as you're ever going to get. So I would have 175 highlighted or alarmed in your charts. And, if the whole thing falls apart, I think a short below 175 would be the ticket. Now, on the upside, you recover 187.50 and then recover 191, then you may have something cooking to the upside. Moving on to Apple, bearish. Why? We lost this 147. We never came up and filled this gap. We came down, lost gap support here, lost the bottom of the gap here at 143.78, and then we stopped on a dime at this 142.5 level, which it's not a coincidence, because here we had a high and we have run into this the top of this value area that runs between 142.50 and 139 type area. The top of this bar is at 140. So I think 142.50 is your go, no-go line today on Apple. If it holds, I would be looking for a recapture of these gap levels. There's going to be muscle memory there. If we come up and recapture that, I think that's a buy. And of course, if you take out the top of the gap, then you'd have something go into the upside towards 147. On the downside, you lose 142.50. I think you're going to come down to 140 relatively quickly. And if things really fall apart, then down to 138, where we had a lot of support back in this area. And then your prior low is down at 134. So I think everything today in Apple revolves around 142.50. And notice the 60-minute chart has become oversold on RSI, and PPO is starting to roll over below the zero line. Those are bearish type looks. Tesla had an interesting day yesterday, had a big push into the gap. I know a couple of guys in the trading room were on this bar really early, and I think most of them made a little bit of money. I don't think any of them were quick enough or lucky enough to flip short at that high. But once it rolled over and then lost the opening here at whatever it was, 755, and then lost the bottom of the gap in this prior high, that was all she wrote. And then losing this level from above at 735, came down to 720 really quickly. I think that's your line today. 720, you had a ton of support here at 720. You've got two large volume over price bars here acting as support. So if you lose 720, your target's going to be 700, and then that will be a big decision point on Tesla. If you lose 700, you can see a big void in the charts. I think it would come down to this 675 sooner rather than later, below 700. So I think today everything hinges around 720. If it holds, you're looking for 735 and possibly higher. If it doesn't, you're looking for 700 and then potentially 675 on the downside. Microsoft, same kind of look as a lot of the other charts. Long consolidation. Lost this 269 area that we had focused on, and then came right down towards this 264. I think 264 is your pivot today. If you lose 264, brings 261, 260 into focus, and then, of course, much lower if that were to break. On the upside, I think you need 266 on a reclaim to buy. That would take out this large volume over price bar and these prior lows. So I think that would be a solid buy on the upside if today resolves bullishly. Amazon lost its 120 level, which had acted as support. Notice this large volume over price value area. We had a little excursion that didn't hold, and then, so that was your bull trap, right? Fake breakout, come back into the range. Where's your target? Once you leave a range and then you come back, the bottom of the box down here at 120. Then we lost that, came down there. It wasn't in my chart earlier, but I filled it in this morning. Got a sliver of a gap here at 116 down to 115. I wouldn't worry about that little gap or that dollar. I think your line is 115. You lose 115, then you're going to come down to this next gap that starts at about 112, maybe a little above 112.25, and then on down towards 110. Notice you do have a large volume over price bar here that should act as decent support here at 110. So that'll be an important level on the downside if it gets that far. But today I would focus on 115 if you're an Amazon guy. And then if that holds, you can be long against 115 and look for a move back up towards 120. That would be your objective on the upside. Moving on to Google. This level here, 2370, capped the upside, and then it was rejected from that level, came down and filled this gap. Stopped right on gap support. I think that's your pivot for today, 2290. If you lose that, you've got a big level at 2275. That would be your target. You'll have to decide if that, if that $15 is, worth it to you. You do have a lot of support here at 2275. Notice all the reactions going way back into April. Support, 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 support. Large volume over price bar. So if there is a bearish reaction right out of the gate, and you see price come down to 22.75, that holds, I think that would be a very objective place to try a long, just because you've got a high volume over price bar, you've got a big value area here, and you got all this support along the way. And hey, if it takes it out and you get stopped out, my initial reaction would be flip bearish, because after you lose all of this support, I would think you'd be coming down to 22.25 pretty quickly, and we've got an open gap down here in the middle. Remember, this outer purple is an old gap that got filled, but with an open gap in the middle. So I think 22.75 is going to be the mission critical line on Google going forward. It has to hold that line. Netflix, we had the trend line off of the lows, broke that, and then broke this 195, 194 line. We've got a large volume over price bar here at 187.50. If we break lower in the pre-market, I would be focusing in on, does 187.50 hold or does it fail? And given there was a lot of traffic in this zone between 187.50 and 177.50, I think you break 187.50, that opens the door down to 177.50. If we open, here in the middle, let's just say 190, I think you gotta wait. You gotta wait to see. You gotta wait to, price either comes down to 187, where you've got an objective level, or it recaptures this 194 area, and then you've got yourself an objective long with a stop just below 194. Semis. We had been focusing on this 240 line, top of the gap. We had gotten inside it yesterday, had a fake breakout here, first bar of the day, came in and broke above 240, and then it let go. I have drawn in a trend line off of the most recent low. You can see that we've got a series of higher lows. Got a low here, a low here, a low here, and now we've got a level here that has been violated. So that would mean a recapture of 233, and this trend line would be really, really important. So I would focus on 233 today as a key pivot point, and depending on where we open, you can take your cues from there. I will tell you, let's say there's a bearish reaction in the pre-market, and we open at 230, let's say. I think that's a tough trade unless you're really sharp trading that opening candle, because you'd be right here in no man's land. I think if you're inclined to want to be short, what you'd really want to see is an opening bar that's green above 233 that quickly fails, That way you'd have a real objective line at 233 to short against, and then you'd be looking for 228. But if it opens here at like 230, what are you going to do? It could go either way. So I think 233 and 228 are going to be really, really important today. If it resolves bullishly and we recapture 233 and get above this trend line, then your objective is the bottom of this prior gap area at 236, and then if all the stars align, 240. So I'm not going to go through ARC today, but use the same kind of analysis. And I mean, this thing is going to be a it's a flip of the coin today. I can see inflation coming in at 10%. I could see it coming in line or slightly better. So I have no particular insight on CPI, and I have even less insight on what the reaction will be. So I'm going to be focused on price today. But let's be clear. The bears got a lot of check marks yesterday. They broke the range. They got price below most of the moving averages on most of the charts that we look at on a daily basis. So from that standpoint, the bears got some check marks. All is not lost on the bulls. I mean, just looking at this example, if SMH were to somehow hold 233 and make a move higher, what you'd say in hindsight is, oh yeah, a series of higher lows. You've got higher highs here. So what's the big deal? It's, higher lows is bullish. So there's a lot riding on today. And don't forget, next week we've got the FOMC and the big option expiration on next Friday for June. That'll be a big one. So we're at a real tenuous point here. The bears break it today and really drive it down, have another 90% down day. I would say the bears would definitely be in control at that point. Here, they've certainly made inroads. Certainly not what I was hoping for, but it is what it is. And so now that idea of maximum flexibility and not getting married to a bullish or bearish narrative is going to be really important. So watch your game-changing levels today, and if they fail, then you gotta adapt to that and go with the flow and not be too worried about, well, I was hoping it was going to be bullish, but now it's bearish. Go with the flow, be a leaf on the stream, not be too worried about what you wanted to have happen, but be in the here and now and, ride it lower today if they want to bury it on CPI or whatever the reason is. It doesn't really matter. So that's where we're at. A really, really important day today. And also, don't forget, Friday afternoons, 2 to 4, it's going to be really, really important. If we were to close it out on the lows today, if they just bury it, then, that saying comes into play, bad selling never ends on a Friday. and then you got the FOMC. So if we go out on the lows today, that would lend you to believe that Monday could be a red day as well. So anyhow, be careful out there. Hope you were able to manage yesterday. I will let you know if I see anything monumental during the day, but you've got the key levels. You've got the key levels. Alarm the ones that you're interested in trading, or at least to monitor. And if you see bullish alarms going off, maybe they resolve this thing bullishly today. If you see key levels break, obviously going the other way. If you're new to the channel, hope the levels help you. If you're interested in this type of analysis, please hit the subscribe button, the alarm bell. Jump over to the show notes, find the link to the blog site where you can drop in your email address. It takes 15 seconds. Then you'll get all my analysis morning, noon, night, weekends, whenever. And you'll get all that stuff right in your mailbox. You won't have to hunt for it. And for the rest of you, thank you so much for supporting me. And I hope your trading's been going well. And I hope the analysis has helped. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.